Welcome back everyone. So in this video, we'll take a look at some of the best trades in the past week, things I'm noticing, how I screwed up on the Asian session for many days, but got a really good trade in the beginning of the week. We'll have a look at that in details. And let's dive right in. I'll also show you some, of course, swing trading as always. I'm a big swing trader. I only trade one day trading strategy, not always, but when I can, I do it. And this is kind of how it went out the past week. So we had one very good day on Monday, the 17th. And I'll show you, this is a perfect example. If I had to teach someone that strategy in details, I'll pick this example to kind of show them. Then we have the other examples after that are completely the opposite, where you wouldn't teach that to someone, or at least you would show them what to avoid and how to do it better. So the basic behind the strategy is you want to be able to trade it with a sideways market first. So before we start the Tokyo session, at roughly 7 a.m. here, Bangkok time, I'm in Canada, so it's 7 p.m. my time, we need to have some kind of range that's very clear. In this market, see, our range was very clear, right? We didn't have many of these ups and downs. By the way, I have a custom indicator here that I coded for this specifically, that I use only for myself and my students. But we need to not have a big variation in price during that time pre-session, right? So the yellow area here needs to be very tight, very clear. See how we have a constellation here before? Then we kind of move down. We have a bit of a widening of the range over here. But overall, it's pretty clear. Our range stays the same then for the whole time until we start the session at 8 a.m. Tokyo time or 7 p.m. my time here. So this is good. Now, what we look for is we look for a break of the range, which we had over here. Now, we look for the first pullback. I've done a whole video on this in the past. Check it out in the corner over here. You can learn the whole rules for the strategy in details. And it's kind of how you go. We look for a pullback. First candlestick that doesn't make a new low on this move will be our pullback. So we zoom out. So we zoom in a little bit over here. We see this candlestick here make a new low. This one here just after makes a new low. But this one here doesn't make a new low. Okay, the low is actually higher here. So this is our pullback candlesticks. That means that we have to enter just below this candlestick over here, whenever we triggered on the next one, to trigger our trade. And our stop loss simply goes above this candlestick here, breaking out the range. Or if you want to be more conservative, above the one before. Okay, I'll put it here because I'll always give it a few pips. It's kind of more safe that way. And I'll just go and do my short position here. Orange tree is right over here. It's a good example because it's not too far from the pullback area. So we don't have to go very far. Sometimes we go down a lot. Then we enter too late. That's not good. But here we have a pretty good move on this. Now I'll target 1-to-1. Put my first stop loss. Put my first take profit. I'll put my first take profit at 1-to-1. And usually I do one at 2-to-1. Just for some extra profit. Now here you see we have a big pullback. And it's kind of what I always talk here about using partial take profits. Because you don't really know how far the move is going to go. You could decide to move your stop loss to break even at 1-to-1 if you want to. So you have a first position with profit, the second one with no profit. Or if you trade it like the very plain way, a bigger take profit 2-to-1, then you cash the whole move here 2-to-1. You see, there's a reason why we put the stop loss beyond the high of the candlestick breaking the range. It's a very strong point because we know this one is having a lot of sell orders here. And we know if it goes beyond that, then price will likely reverse because a lot of people put the stop loss there. I always put mine a few pips above the high, so we know we have a bit of buffer for these things to happen. When we pull back at the high again, then we go down again. So we need to be careful for these things and plan in consequence in that case. But that was a really good textbook trade. Now, I'll show you why sometimes it doesn't work well. We only had one good day last week. The other days were a bit kind of not what I would look for necessarily. So here is on Tuesday last week, on the 18th. Now we have a very clear range before we start the session. See how the high is the same throughout the pre-session. The low changes a little bit, but it's pretty alright, pretty good, pretty clear. But when we get to start the session, we have a bit of a condition here. We have a bit of choppiness in the market. Now, if you want to trade this textbook, like I teach it to my students step by step, this is our candlestick breaking out the range. Then we wait for the pullback. This one here is making a higher high, higher high. This one makes a lower high. So this will be our pullback candlesticks. But we would need trigger after this, okay? So orange will be whenever we touch above this. Now, if it's more than 5 candlesticks or so, I cancel the order. So here we will not trigger there because that's way too far. That's more like 11 candlestick is too far to enter the trade. So this one is kind of missed in that case. Anyway, with that kind of move here and stop loss we would have, which would be somewhere over here, that gives us a huge stop loss to think about. Okay, that's pretty big for a time frame like this. So I would avoid this one. Then we get to when we have a second breakout, and then we kind of get in a tricky place because is this our high or is our high still the pre-breakout? Well, I would argue if you have a big condition like this above, then our high of the range becomes this one here, because this is not really relevant. We broke it many times, came back within, broke again, came back within. Not very relevant to our trades here, so I would avoid this one. But then we get to the other side, and this is where if I'm in Canada, I cannot trade this because it's too far off in the daytime. But if I'm in Thailand, then I can trade this really well. Because in Thailand, this would be like in the afternoon. Yeah, roughly noon, 1 p.m. Pretty good time for this. So see how we invalidate this side here of the range. Now the other side becomes more active because we still respect the low. Our support here is still respected many times until we break it over here. Now I would argue candlestick breaking the range is this one here. Okay, because this one is just not really strongly breaking the range. It's a kind of a pin bar a little bit, or an indecision candlestick. But this one here breaks the range. So we look for our typical entry, which is a first pullback. This one makes a new low. This one here doesn't make a new low. So we enter below it over here. Okay. Now this is where we have a big pullback whenever we take our trade. So again, keep in mind when candlestick breaking the range is this one. I want my stop loss to be in the range. My stop loss will be going over here. And that's probably going to be triggered right after this. Okay, we had a wick. We had a bit of a luck here. But we get stopped out with this trade. Now, if you were to put it a few pips above the high, like I recommend, you could get away with this. You could be in profit anyway. If you put the candlestick before, then you'll be in profit here. But keep in mind, that's a big stop loss. Okay. So when I see price pulling back so quickly with this candlestick here, the bullish one, we could decide to cancel the order, or we could at least decide to get out with the partial loss. In any case, it's a good trade that fits the rule. You could still take it very well. But keep in mind these wicks, especially in the Asian session at the end of the session, will stop you out many times. Keep that in mind. But other than that, if you had your stop loss higher, a few pips above this high, like over here, then you could be getting a good reward to risk on this. Now, I'll say this is a loss to me because I would typically be a few pips above the high, but not too many. So I might be getting out in the loss in this one. So yeah, but that was a tricky one. Okay, then we get to here. Next day, this is a very messy range because see how the range is starting here, going up and up and up and up, then going down and down and down over time. We have a very wide range here. Now, if it's clear at these levels, you could still trade this, but let's see how the breakouts happen. Okay, we bounce, pretty clear, and we stay in the session the whole time. So no breakout trade here because the range was so high. From the top here to all the way to the bottom there, that's a big range. Okay, so we won't trade this. Next session, we have a big drop and we have a range expanding with a gap before. The resistance stays pretty good, so we can still trade this resistance here. Except that, see how fancy this looks? Now, I'll say this, if you trade this, you'll be stepped out. But if you trade it with the rules I have, you will not be stepped out, you will not even be in a trade. And it's just because we look for a break of the range. Let's say we have a break over here of our range. Okay, I think it's pretty alright. Candlestick that makes a pullback is not this one, not this one. It'll be this one, the bearish one over here. So we have to enter above this candlestick to trigger a trade. Now count the candlestick, 1, 2, 3, 4, 5, 6, 7. So we'll cancel the order before we even get here. But this here is news. So if you trade in news with a tight stop loss, so your stop loss will be in that case somewhere over here. That's going to completely wipe out your trade because the news is going to be widening the spread. The spread won't be a very tight spread if you trade in a normal account. It will be like 3, 4, 5 pips. So you can get stepped out of this trade in that case. This is 94.586 and our price here 94.7. That's only like 10 pips here difference. So we could get stepped out on this one, especially when you start over here. So keep that in mind. But this could be a trade if you're less risk averse, a bit more aggressive, you could take this one anyway. Especially when you know a news coming up. You could risk it, but you can be stepped out more often with this one. Then we get to, here is Friday. Now this is a messy one where I would not even trade this when I see price going down and down and down before the session. Okay, we're kind of more in a trend, not really in a breakout state here. So I would try to avoid this one because we just kind of are going to break out and come back and break out and come back. So it's a bit more messy here. I would avoid this one. On the other side though, if I was in Asia and not in Canada like I am right now, this would be too late here in Canada. So 9 p.m., 10 p.m. is getting a bit too late. But in Asia, I would be able to trade this on the other side. Now see how we have one side here that's very clean. The resistance here is very clean. It's always the same level. Didn't change no pre-range. The support is too weak because it's changing. It's not really a real support. So we would avoid this one. but we could be trading this resistance here. Now this comes a lot later in the session when we have this break. First trade will probably be a loss. We have a breakout happening over here. This one makes a new high. This one does make a new high. So we enter here above or high. And this would be a stop loss somewhere over here. So we'll probably stop out here on this trade. Maybe a 1-to-1. That's possible. Probably not. Let's just put this on the screen here. We go long. Entry somewhere here. Stop loss there. That's not a 1-to-1 for sure. No, 0.721. Okay, so here's a losing trade. Okay, this happens. It's totally part of the plan. But if this were to break again, like it could, then this would be another trade to look for. Because we know we have momentum, we just fell on this first move. Now you see price here comes back within the range. Now our new range height is going to be this one over here. Okay, that's our new range height. And see we have put the line over there. Because forget the entry here that's in the middle. We wouldn't take that. We would only trade above the range. This indicator doesn't adjust for the new range in the session. It only adjusts for the range before. So let's see how this goes. Now we have the same principle. Candlestick breaking out the range. Is this one over here. Then this one makes a new high. This one makes a new high. This one doesn't make a new high. This one is our pullback candle. We enter above the high here. Remember a rule of 5 candlestick maximum. So above after this one, 1, 2, 3, 4. Triggered on 4 candlesticks. And then we enter a trade and we have a pretty good move in our favor here. Okay, this is pretty good. This is the kind of trade where you make most of your money if you're around. If you're not around, then you kind of miss it. But you have to be willing to wait late in the session to take your trades. And to be in it even if you had a loss before. So our entry is there. Stop loss would be right over candlestick that break out the range. This one over here. So it could be somewhere right here. We'll do a pullback because we have a pullback here. So we can want to save that for our trade. And then our targets. We have 2-to-1. Very easily achievable in that case. We could even do 3-to-1. So in the strategy I teach people to do 1-to-1 and 2-to-1 or 3-to-1. They can choose which one they prefer, which one makes sense for them. In this case, 2-to-1 is fine. 3-to-1 would be even better, but we cannot know this in advance anyway. So our trades here are pretty clear. And that's kind of how we end the week here. Now, this week earlier, Monday, so yesterday, we had this pretty cool trade here. Range is pretty clear. Okay, we widened the range a little bit more, but the support holds. And then we get here. Candlestick breaking out the range will be this one over here. Because it is one, but it's the same thing. Pullback is over here. We have to enter below this low. We will probably take this one with the loss. That's just unfortunate, but that's kind of how it happens. So here we enter this with over here, triggered there. So this is 5, triggered on the 5th candlestick. So interesting to see. Or stop loss though will be quite far. It could either be here, or when we step back, we could move it to here. Okay, so this is giving us a big stop loss. But that's kind of the trade where you want to not necessarily be in it, but you happen to be in it because the rules are strict. And if you follow the rules strictly, then you'll be in that trade. Now what happens next is we just stay within that movement and probably get stopped out here over time. So keep that in mind. Yeah, it's been a tricky session, this one. Even though we start well, when you see the price starting to chop around, go back within the range. When price goes back within the range, we don't want to be in the trade anymore because that's just not working out for us. So this one here could be the right stop loss in that case. The first one. And here we are in live now at this moment. I'm not trading this in that time. This is now morning in US time. So what about this? Now last week in terms of swing trading, I made most of my money on USD Singapore, which was hitting a support over here. And we'll have a look at this on the lower time frame right there so we can see how that looks like. So you have these triangles here that show us the setup. This one is very weak. I wouldn't take that kind of setup because we're just kind of closing at the high of our candlestick before. But this one here is a lot better. Okay, we have a big push from a wick, breaking the Bollinger Band, always important. Then we have this engulfing candle right after over here. Gives us a good setup here in that case. Not my typical BBR setup, but still a strong one. So we want to do this here above this candlestick right there. Stop loss below the low. And our take profit will be at 1-to-1 and 2-to-1. So 1-to-1 is already closed. You can see it's been closed over here. 2-to-1 is still going on because we can still kind of catch some money on that move. But the stop loss is now moved to break even for if price pulls back and give us a bad trade here. But so far we're pretty good in this one. This week we've got Euro USD coming up to a support area. Now I don't trade USD with the typical Bollinger Band reversal setup because it works pretty badly on it. But other strategies work well. So more like the engulfing, with a bit more confidence can work well on this. So if we move out over here, we don't have any resistance. We don't have any support yet on this, but it could be a good place to look for bullish trades at the 1.10 or so. So if you have any questions on these strategies, let me know in the comment section below. I'd love to be able to help out and answer your questions on these. I also just published a new thing, which is my Trading Strategy Playbook, where I basically take the strategies I've built over the last 10 years of my trading and package them up into a playbook, which you can use to trade these strategies by yourself really well. It also includes some checklists, some things you can do to take the trades by yourself easily and not mess up on these. So it's very easy if you can follow the checklist to make money with those strategies. Now, I'm not saying it's the solution to all your problems. You won't be profitable if you still screw up on the rules and everything. But if you want to have some good strategies to follow in different market conditions, for swing trading, for day trading, this will work out quite well for you. The link will be below for this, and I hope you can benefit from that playbook. With that being said, I'll catch you back here in the next video pretty soon. Ciao.